The reason I want to bring this up now and get this podcast out before Christmas.
Well, Michael, I've been researching the market for about 10 years trying to find the perfect property, and I haven't quite found it yet, so I'm hoping you could help me. That was the light bulb moment for him.
There is always an excuse, and naturally we just always default to I've got an excuse, which can push it off to another day. Welcome to Brick to the Future, back with another episode. I'm Cam Mclellan here with good friend and business partner Michael Beresford. How you going, Boz?
Great, Cam. Looking forward to this.
Yeah, we'll get right into it. I want to talk about procrastination. You know, this is something that I've never had, so I struggle with it a little bit. I'm more of a dive in and worry about the detail later sort of guy, with some sort of calculated risk. But that's basically the crux of how I've lived my life, as you know. So it always worries me that if we're looking at the building prices and the cost of land and the cost of living in Australia, when people wait, and there's always a reason for waiting, they need to really understand what the cost of that procrastination is. The reason I want to bring this up now and get this podcast out before Christmas is that it's in people's mindset that Christmas is the big thing and they need to wait for. We'll do something after Christmas, but Christmas comes with usually quite a steep rise in builders' costs. It's it's the 2 times a year, mid-year and after Christmas, where the builders jack their prices up, and it's also where the developers, because they need to settle a heap of stuff before Christmas, then they jack their prices up with the new estates after Christmas, which pushes the overall housing market up, whether it's established houses, whatever it may be. So I wanted to talk to you today and have a think about some of the people that you may have come across that procrastinated, a couple of examples, and then talk about those excuses that people tell themselves in their mind to stop themselves taking action.
Yep. We hear this a lot. It's such a great thing to be talking about, whether it's this time of year or any time of year. I think the number one thing that holds people back is there's always a reason not to do it. And the mindset tends to be more around, I can't do it because of A, B, or C, as opposed to I'm going to find a way to do it by doing A, B, or C. So the default mindset position tends to be a negative one. Someone told me this about 25 years ago. I've never forgotten it. Procrastination is the grave in which opportunity is buried.
Jeez. That's
okay.
And
it's never a truer word spoken. I remember, I think I mentioned on a previous podcast or some of our YouTube videos, I had an appointment 2012, 2013, relatively early days of OpenCorp with a guy named George. George had been, I said to him, what's been holding you back? Tell me about your investment journey to date. He said, well, Michael, I've been researching the market for about 10 years trying to find the perfect property, and I haven't quite found it yet, so I'm hoping you could help me. I said, hey, George, if you just bought something average 10 years ago, do you think you'd be better off today? And that was the light bulb moment for him. Right? Perfect is an illusion. Nothing's perfect. The time to invest is never perfect. The property is never perfect. Think about the house that you live in, whether it's a rental or your own house, it's not perfect in some way. But people justify that that's okay because they're living in it and it's for them, as opposed to saying, well, what do I need to be doing now? And taking a long-term view, and we say, property is not a short-term investment. You need to be taking a long-term horizon. Do we think that property prices are going to be higher in 10 plus years than what they are today? I'm yet to hear anyone tell me an answer other than yes. But for some reason, they think, it's not the right time because of interest rates. It's not the right time because of the economy. I've got kids starting school and we just need to focus on that to begin with. Like, life's busy. Get over it, right? You're going to have multiple things that you have to factor in. But if I said to you, dumbed it right down, you could do one thing today that took you 90 minutes of your time and it would pay you $500,000 or more in 10 years from now. Would you do it?
No, it's absolutely no doubt. It's good return on investment.
Right. So it's the mindset and the way that people justify their thought making and their thought process and their decision making that is really the thing that holds most people back.
If I think about our average clients at the moment are making around $250 a day growth. And that's conservative. It's closer to 10 grand a month in growth. Then someone not investing is missing out not only on that growth, but the building prices are going through the roof. Now, I keep referring to building prices because the cost of building, if we saw after the National Construction Code was changed and there's around $17,500 to $25,000 put on the base level build of a base level home, 4-bedroom home, what happens when that base level cost of building is rolled out, whether it's because the government puts new policy on, or whether the builder puts prices up because they want to make more margin, or the building industry costs have gone up, that then pushes all the established houses up.
Right.
So not only are people going to miss out on the standard growth of what's going on in the market, but they're also going to cop the growth. So it's like a double hit. I always think about when talking to people, they always use I'm too busy. I've got to sort my kids out, or I'm too busy because of work. Or you should be investing so you got more time with your kids, so you have to work less.
As a thought process I was talking about, right?
That's that reverse mindset of going, all right, so what do I have to do? Because, as you said, there is always an excuse. And naturally, we just always default to, I've got an excuse, which can push it off to another day. Mm-hmm. But it's coming. You have to invest at some point in time if you want to get out of the rat race. So take the time immediately, look at it. Especially, that's why I think this is really poignant before Christmas. People looking to invest, then now's a good time. Melbourne market's cranking, the other capital city markets are cranking, and it's no myth that prices are going up, let alone the building costs.
The part, we always talk about that we're taking a long-term view. The one time of the year where the market is booming and act now, or you'll be far better off, where our language starts to change around that is not just builders come back from Christmas holidays and increase their prices, right? But more people are hell-bent on, they kind of kick themselves and they go, right, I said I was going to do this in 2025 and I haven't done it.
Yeah.
Bang, I need to get it done, so they can kind of say, hey, I achieved this goal in 2025. If that happens, even on a small scale across the country, that's a fair bit of extra demand.
Yeah.
And we saw there's a developer that we know, as you know, they released 20 blocks of land 3 weeks ago on a Friday night. There were people arriving pre 9 a.m. Take a ticket. 53 people turned up. 20 blocks of land were under contract in 23 minutes.
Yeah.
Right. So just think about what that means from a market dynamic perspective. The developer is going to increase the price.
Yeah.
By 10 grand is typically what we see for the same thing the next weekend.
Yeah.
Right. So yes, property is not a get rich quick thing, but at Christmas time, when there is this demand, and we know that prices are going to go up every year, we calculated it being between $30,000 and $40,000.
Yep.
That you're better off if you act in December than if you act in February.
Yeah, and I want to just make it really clear as to why those prices go up. You've explained why the development prices go up for land. The building prices go up at 2 points of the year. The mid-year reason that goes up after the financial year is because the builders try and get as many contracts in before the end of financial year to secure up. So they offer specials, basically, or they hold their current price. And as soon as that next financial year kicks over, they put their prices up. It's just a standard throughout the industry. Then come Christmas time, where the building industry dies down a little bit, the owners of the building company and the office admin actually get a bit of time to breathe, and they do this calibration of the building costs that have increased over the last 6 months, and they go, shit, all our costs have gone up, we need to smack our prices up. So that's why you get those 2 times a year when the building costs go up. So you're 100% right. If people have got any idea of investing, doing it in December is the time to do it.
Yep. And I think, from a cycle perspective, you asked me earlier, what are the main things that hold people back? Interest rates, the economy, life is busy, are kind of the three key ones.
Yep.
If we think about the interest rate side of things and the impact that has on market dynamics, as we always talk about, the 4 major drivers: supply, demand, affordability, and sentiment.
Yep.
Now, we were telling everyone in COVID, and we wrote a book, Investing in the New Normal, about it. By now, this is what's going to happen. Governments will commit to overdosing on overseas migration because they need to restore the balance sheet of the country.
Yep,
there's going to be stimulus, etc., etc. Some people listened to us and made a mozza. A lot of people found the but and didn't, and now regret it. So the cost of that alone is $100,000 a year for the last 4 years.
Yeah.
Right. Probably at a minimum.
Yeah.
But when you think about what that means moving forward, people say, oh, well, interest rates are higher now. Are they going to come back or not? That shouldn't be the decision-making driver for you, because if you're buying, your responsibility is to buy something that's within your borrowing capacity that you can afford without impacting your lifestyle.
Yep.
And on interest rates where they are today, even before the recent reductions, that's absolutely achievable. But people think that property investing's only for the wealthy. They think that it's expensive. They think it's going to impact their lifestyle. Do the DD, the due diligence, to understand, well, what do I want to achieve? What can I afford? What is my borrowing capacity? Don't make assumptions on those things. Actually investigate it. And then it's amazing how much clarity you get very, very quickly.
I was just I was talking to the girls in the office before this, knowing that I was coming into this one. I said, "Have you got any examples of clients that have gone through and done the procrastination thing?" And Andy and Jenny.
I do know Andy and Jenny.
Yeah. So
great story.
Yeah. So they were living in a really small unit. Wanted the dream home. Obviously had the deposit. Could have bought the dream home. Instead, I think it was just before last year, bought first investment property, knocked out 2 more. They've gone up to the value where they're now buying the dream home. So in such a short space of time, by making the right financial decision and not jumping into the dream home straight away, they've been able to create a huge amount of equity, still hold 3 investment properties, and they're out of the unit. Yes, it's taken an extra 12 months of living in a small unit, but a little sacrifice has gone a long way, and they are pretty well set now. So it's just I love those stories. Anyway.
Well, no better forum to announce this. I haven't caught up with you before this today, but one of our staff that you know very well contracted on a property 6 months ago. In their super fund.
He called me this morning.
I'm sure he did. $100,000 up on the valuation.
Yeah, I know. He called me this morning. He goes, "Oh my God, thank you."
Well, that's a pretty good metric of opportunity cost. Got in and has done very, very well in a short space of time.
Yeah, no, he got a call from our finance broking team today. We just got a valuation back. I got some bad news. No, there's no bad news. You've got $100,000 up. So, I love those good stories. Anyway, procrastination. There's always an excuse not to invest. If you know you have to do it, spend the time, get amongst it.
One last thing I'd say, there will always be a reason not to do it in your own head. The more people that you talk to that aren't investors will only give you more reasons not to do it. We all talk about well-meaning Uncle Bob at the barbecue, hasn't got any property, hasn't ever invested, but always got an opinion on the market's not right. I bring myself back to a client of ours, Bruce. I first met with him in 2008. He got told, you'll fall off your chair. He got told by his accountant in 1998 not to buy a property in South Melbourne for $200,000.
That would have been crazy.
For those of you around the country that don't know, South Melbourne median house price is probably $2.5 million. Okay. And thought that the market was hot and all these kind of things. So just be very wary that the human nature is, when you're unsure about something, to go seeking validation from people that you know, and people that deal with money tend to be the people that most people gravitate to. If you need to do that, consult people that have actually done it. Consult people that understand this, not just people that know money, because what you'll find more often than not is that it will create uncertainty, talking to people that don't understand it, and that will just make it worse, and then you'll seek more validation, you'll get more uncertainty, and that's generally what causes people to procrastinate.
So to put in perspective, just to give people the amount of negativity compared to positivity and there. And if anyone needs help working through their investment strategy, contact OpenCorp. You're more than welcome to. No pressure, no obligation. But the amount of negative people, so I did a sum a few years back, which you know about. If you fill the MCG, 100,000 people, and you go around and you talk to everyone and ask whether the property's good or not, there is only 63 people in the MCG out of that 100,000 that have 6 or more properties, based on the ATO and Bureau of Statistics. So everyone else in there is going to say property's shit. The 63 people, so if you go out in the general public and you're asking about it, you're going to get a negative connotation to it because people are just too scared to do it.
The chances of finding one of those 63 in the crowd are minute. They're even lower if you think about how many people you'd have to talk to find them to start with. So.
Align yourself with knowledgeable people. Anyway, thanks for listening to Bricks of the Future. Make sure you like, subscribe, and we'll talk to you shortly.